All right, ladies and gentlemen, we had some big news hit the tape after hours, and we're going to discuss that and what that means for the financial markets on today's Stock Market Brief show. Hopping right into it today, not wasting any time. Yes, Fitch downgraded the U.S. credit rating. We went from AAA to AA plus. Now, we should be well aware that this potentially could have taken place. If you've been here watching this channel, just a few months ago in May, we were discussing what happened to the financial markets when this took place. We actually included this tweet in there. The United States AA rating may be cut. This was back in May 24th. That was the heads up, and we know this because they did put us on that negative watch then. The first and only other time that the U.S. has faced a credit downgrade was in 2011 when the S&P lowered its rating from AAA, meaning outstanding, to AA plus or excellent. So what happened in the S&P 500 during that time, which I believe here was August 5th or 6th? Well, we saw a one-day down move of around 6% and then a lot of chop. There was a lot of things leading up to this that made it look like it was going to happen. Remember, we always say here that it always looks really obvious in hindsight, right? We've been showing a lot of macro data and various charts showing how credit was tightening, what happens to the markets, what the Fed has been doing, and we've been showing a lot of interesting data. So to see this come up, it does make some sense, but we got to just play it day by day and see what the market does with that information. So we can show you from another perspective of very important assets of what to watch. So for example, we can take a look at the 10-year yield. Today, it was up 2.32%, so moving itself up. But what happened during the downgrade? We're going to be looking at that momentarily. The TLT was obviously down. There's various different bond products that you can look at, but really we're just still within this kind of choppy range below those key moving averages. Big down day overall. So what happened during 2011, right? In August 2011, there's 2011, there's August, the 10-year yield actually started breaking down, sending bonds upwards, okay? So this could be a potential play here if the market reacts very similarly like it did in 2011. It's not really a prediction. I'm just showing you what's happened, in the past. Another important asset to obviously watch is the dollar. We've been talking about the dollar potentially coming back to break this trend. Well, guess what? We took a big move in the dollar today, almost up 0.5%. And as you can see, the S&P 500 has just not been affected. However, when it's been going down this time, the S&P 500 has been going up. So is this trend going to potentially break to the upside and potentially the S&P 500 take a break? Well, let's take a look at what the dollar did in 2011. Well, you can see the dollar actually in 2011 was in a down trend, moving down to around August, right? So this is where it all took place. And then it started breaking out to the upside, creating obviously a lot more volatility in the overall S&P 500. Okay, we're going to get into new daily expected moves. We're going to talk about the weekly expected moves too. This is not a time to really be fearful. It's a time to be more prepared and watch key levels. Now, we do know that in August, the start of August to around the 6th or 7th trading day, we typically get weakness in the start of this month. That's nothing new. Typically, this mid-year, pre-election year is where it started in mid-July, is where we tend to get the slowdown in the markets, okay? That's just based off of seasonality. We do also have earnings, big ones after the close on Thursday. Apple and Amazon are on deck. That's going to be in a few trading days here. Before the open tomorrow, we have stuff like CVS Health, Generac, which could be an interesting one. This is one chart that I've been actually paying attention to, watching. And then we have a couple more down the list. I'm not going to spend too much time on that. We also have some important data coming out throughout the remainder of the week. Wednesday, not too much going on over here. You can see in Thursday we get that ISM services PMI, and then Friday is the bigger day with the jobs data. Let's hop into the S&P 500 and I'll give you kind of a rundown of what I see. First and foremost, we've been talking about that bearish engulfing or that bearish outside trading day, and it hasn't been validated either. It hasn't been invalidated, and it hasn't been actually confirmed as a turning point either. As you can see, we've had 3 trading days trading just within that candle. So to be invalidated as a bearish turning point, well, 459.44, we'd want to see a close above that. To see it more bearish, we'd want to see a close below 451.55, and we're just not there. And if we do get there, understand that we're still we had prior resistance. That resistance was not tested, so this could potentially become a level of support. So even if we move from 456 to back down to 442.50, we would still be in an overall uptrend. However, it would be under pressure somewhat as we'd be below that quarter-to-date anchored VWAP, but it could still be a potential level to watch if we go further to the downside. Prior to that, you'd want to watch that quarter-to-date anchored VWAP. Now, as you can see, the 15-minute time frame, these are the daily expected moves. We talked about this yesterday, how we can potentially play a bounce trade from that because the 5-day moving average was still moving up. And just look at this. It's like the algos just do not want to give this thing up at all. And if they do, they're right back over it the next day. You could see we've been just on that, and it's still inclining at this time. We tagged the lower daily, and we found a place to bounce from. As you can see, week to date is actually holding as a level of resistance. So in order to be bullish, we need to what? You want us to reclaim that week to date anchored VWAP. So you want us to get back above this level, which is just around 457. And you want it to hold to open up the door to the upper daily expected move, which is 458.71, to potentially the upper weekly, which is 462.37. However, we got to be mindful. If we start taking out the low of today or the low of the prior trading days, this opens the door to the lower daily expected move and potentially even a gap fill, as we've seen these daily expected moves with news, right? So this news dropped after the market. We can very well see 2 sigma moves, and a 2 sigma move could take us very well to a lower weekly expected move to come test this area, and be mindful that we'd still be above a quarter-to-date anchored VWAP. So yes, it would be basically the 5-day moving average would be inclining. Say if we closed down here or whatever, or came down here, it'd still be inclining at that time. So it would be bearish, but with caution, because we're below a 5-day moving average, that if we stay down there longer, it starts to flatten out and then starts to go over, and that means the trend would be, in theory, changing from this time frame. Let's look at the NASDAQ 100. If we take a look at the daily time frame, you can also see this was almost invalidated. We didn't have a close above this big bearish day over here as we gapped up, and then it closed around the low. But you can see it's been holding that quarter-to-date anchored VWAP, which happens to be right around where prior resistance can become a level of support. Okay, so really, in theory, if we came all the way back down here, the uptrend would still be intact. We have a high, you have a low, a higher low. We currently have a higher low right here. Okay, so if this is broken, we'd still have these as higher lows, but we would start be making lower highs, okay, which means we could have a period of longer consolidation. But overall, I mean, if you look at this, you just had 3 days of consolidation. If we start breaking above, say, this trend right here, get above yesterday's high, that was yesterday's, or technically today's high. If we close above that, they can open the door to come retest this 2023 high right here. So it doesn't look all that bad at all. It's just we're getting some news that could very well affect the markets, which is basically telling us, hey, just be cautious right here. Now, if you want to look at the 15-minute time frame, we tagged that lower daily expected move, and it also tagged what? The inclining 5-day moving average. They came in confluence. We saw a bounce up from that level. But did we break that resistance? No, we did not. Okay, so if we update the daily expected moves, 385.49 to the up, 380.09 to the down. Okay, those are what the market's pricing in as far as forward-looking risk. If you don't know what those are, okay, think of it as a distribution curve. 68% of the time, price closes within these levels. So if you're playing with probabilities, this is, just good areas to keep an eye on. It's based off of not just me putting these levels here. It's based off of implied volatility through the options market, okay? Now, 5-day moving average, like I said, it's rather neutral, but it is still inclining in the very shorter term. But as you can see, it declined. Now it's moving up. So overall neutral. That quarter-to-date anchored VWAP is holding as a level of support. So if we start breaking down and get a 2 sigma move tomorrow, take a look at 376.11. If the market shakes it off and we get back above this resistance, look at 385.49 to potentially even play it up to 390.85 for the remainder of the week, which we still got plenty of time. I expect us to tag one of these expected moves on the week this week, especially when we got things like Apple and Amazon reporting. If we take a look at the Russell 2000, down slightly on the day, but it's still consolidating. Remember, this big move, it hasn't really been digested yet, so it's going to be, we're going to keep an eye on it. I still think 200's reachable, but even if we break down a little bit and come back test this area, as long as we're holding this all-time high anchored VWAP, potentially even this quarter to date, That's a good sign overall, but remember, we've seen these strong moves up before and they've all gotten faded. This is just the first time that it's actually been holding up there for that long, which so far is actually a good sign, right? Let's look at the Dow Jones. The Dow Jones broke through this area of resistance, and once resistance is broken, it can very well become a level of support. So if we do start breaking down 346.20 or potentially the quarter to date anchored VWAP, this is if we see downside in the market. If we were to hit a big move like that, people would freak, but really, what would that be? That would just be a potential back test of a prior breakout. So if we see strength after that, that opens the door for an opportunity to buy the dip to potentially even come for a new move to that all-time high. Now, if this is one big bear trap, right, if you added down here on strength, boom, right, just manage risk as the trade plays out. Now, I want to talk about the Sailor to Shift tool. This looks like I'm thinking it could be a potential asset to watch in the midst of this volatility. I'm looking after hours and Bitcoin's catching a little bit of a bid here. Okay, so I couldn't pull up a chart of what Bitcoin looked like in 2011. It didn't work on my platform, but I wanted to just call out this is starting to turn itself back over here. This is the Sailor to Shift tool. I have a video. If you look that up, you just type in figuring out money, Sailor to Shift tool. It's predicted all the big it hasn't predicted, but it's caught all the big crashes, got us out of it, and the big run-ups too in the price of Bitcoin. But the reason why I'm saying this here is I'm seeing this start to move, and then I'm looking at assets like crypto related equities like Mora, so M-A-R-A, and then also like something like Riot. If I'm taking a look at these are a couple trades that I shared with my Patreon group, way back here. But now I recently re-showed them because these price action, it went on a huge run, had big volume, then it started digesting into the 20 SMA with decelerating volume. So the pullback was on low volume, the run-up was on good. So if crypto assets are going to catch another bid, I would imagine that we'd see stuff like this potentially play more out to the upside, potentially go to swing that 20 area, which would be a huge move, 17 to 20, right? That's $3 per share. So this is a high beta name, so you got to be careful with that because these things can turn around on a dime too. And they might be reporting earnings here soon, so you got to pay attention to that as well. And then Riot, very same situation, how it's broke out of this very tight consolidation. You can see price action contracts, boom, it expands, price action contracts. So are we going to expand to the upside, or is it going to break down, get back below 17, and then maybe go retest that 50-day moving average? Something that I'm paying attention to, noticing Bitcoin in the after hours, a couple trade ideas. That's all I got for you on today's episode, everybody. Hope it helped out. See you later.